Hello, everyone. This is Will Duckworth, lead strategist at Narrowgate Trading. It's Sunday, November 9th, 2025, and I'm here with a fresh look at the 10 foreign currency pairs I watch, following the price behavior that transpired on Friday. As of the end of the week, the Aussie dollar Japanese yen's multi-day price flow has gone from bullish to neutral, or perhaps even slightly bearish, and of course, the Aussie dollar US dollar already saw its multi-day price flow transition to neutral 3 days ago, and at this point, it too might also be slightly bearish. Nonetheless, seeing as how both rates are continuing to flounder within the lower region of their multi-day price ranges, not to mention they're still being located within close proximity of their 5-day temporal support levels, the statistical probability of their eventually climbing higher from where they are now remains greater than the odds of their crawling significantly lower over the next day or two. With its 6-hour price flow channel being more or less neutral, and the rate still positioned in the middle of an almost neutral 24-hour price range envelope, the euro-dollar-British pound status is a pair in which I have no interest. Attempting to navigate remains the same. Given that the euro-dollar Japanese yen's multi-day price flow has now turned slightly bearish, with the rate confronting the top of the daily price range, and with the 5-hour temporal resistance level only about 50 pips above, this pair could turn south at any time. So my plan is to simply watch it for now, and then enter a short position if and when I confirm that it has genuinely maneuvered a fully fledged reversal to the downside. In the meantime, I will be looking to buy pullbacks in the 6-hour price flow so long as 6-hour price action remains bullish. The British pound Japanese yen is essentially in the same situation. Ditto for the cable US dollar and also for the euro dollar US dollar. The US dollar loonie is in the exact opposite situation, along with the US dollar Swiss franc. And finally, the US dollar Japanese yen is sitting in the middle of its now neutral multi-day overall price flow channel, which would totally put it in question, except that it is also sitting on the lower band of its 5-day temporal support resistance channel, increasing the odds of it rising ever so slightly over the odds of it continuing to decline, especially given that its 6-hour baseline transition from bearish to just a bit bullish by last week's closing bell. Bear in mind, however, that all of this merely constitutes my own personal views and opinions, and should not be construed as recommendations to buy or sell any financial asset. I am not a licensed financial advisor, so any decision you make should be based on your own ideas and due diligence. That said, let me wish everyone the best of luck, and until next time, if indeed there actually is a next time, stay awesome. But bye for now.